Tēnei au ko te uri o manu ko taitanga tiki he matakahi he mānuka he kahika I ahu mai te kuanga tapu a te whare te mānuka, te whare kura o manu kapua tēnei au. Wā tēnei hōkai a wai whana ringa hikoia te whetū, hikoia te marama. Kai te whai ao, kei te ao marama, whano, hara mai te toki haumi e hui e, tā iki e. Ai ngā uri o tupuriri, koutou mai noho ana I tōna kahau, tōpuni o tēnei o tāmaki makaurau piki mai haere mai. Haere mai koutou I ngā tini pito o te motu, tika Māui me te waka Māui. Piki mai, haere mai, haere mai. Haere mai ki tēnei kōrero te whakakāturanga, āputea o tēnei o ngā mahi te tau kohipa. Ka huri o ku whakaaro ki a rātou nā, kua whiturangi tia tātou nei whānau te wiki te marama o te tau. A rātou nā, oki atu rā, a ki Hawaii nui, Hawaii roa, waki pāmamao. Rātou nā, e moe, e moe, e moe. A tātou koe whakatōpu nei te hui topa, haere mai anō. Haere mai ki tēnei kōrero, te tau, ngā mahi pūtea, te tau kohipa. Tātou nā, ko tai mai, haere mai, haere mai. Mātou nei, maua nei ko Precious Clark, I rungi te pāre o Ngāti Whātua Ōrākei. Maua nei noho te kōtihi I te kūrai, whakaparawhau. E mihi atu nei, e mihi atu nei. Me tō tātou nei rangatira, te kai whakahaere matua putea, ko Scott Barkman, ko tai mai, ki te whakapuaki e nei o ngā kōrero, ki a koutou no mātou te whiwhia koutou ko tai mai, I te whānau, e ngā uri, ngā rangatira, haere mai, haere mai, haere mai. Tuatahi mātou nei, koe mātou, koutou, kare nā, kia mātou, I nei o ngā rangatira o te poari, te tuatahi ko au ko Renata Blair, e uri ahau no Ngāti Whātua Ōrākei, tino poho kereru, poho kawa ana, ai tēnei mihi atu ki a koutou. So, ka huri te reo teina ki te whakamohio e nei ta ao pūtea mo te tau hipa. Ko Renata Blair hau, I live on Bastion Point for the past 34 years and previously from Helensville, so I'm a very proud member of Ngāti Whātua Ōrākei, a director on the Ngāti Whātua Ōrākei Trust since 2013, and also a recently appointed director on Whairoa. So I'm very proud. I live on Takaparawhau, love our iwi and what we're doing to revive our culture, our reo, our tikanga, everything to do with a Ngāti Whātua world view. And so I want to acknowledge you that have come here today, tonight, to our financials webinar, and I'm going to hand it over to Precious and Scott to also introduce themselves to you tonight.
Ngā mihi nui ki a koe Renata me tō karakia hei tuwhira tēnei hui o tātou. Nō reira e tika ana ki te mihi atu ki a koe. Awa tira ki a koutou ngā whānau, kua tau mai nei ki tēnei huihuinga a ipurangi nei, nei rā te reo mai o hā ki a koutou. He uri tēnei o Ngāti Whātua, no te whānau hāka hau, no reira he uri no apihai, he uri no tupuriri. Kia ora everybody, my name is Precious Clark. I have the absolute privilege of being in service of our whānau by being on the Ngāti Whātua Ōrākei Trust Board, and previously was on Whairawa for the first 10 years of its existence on that board as well. So very grateful to all of you who have tuned in to hear this webinar about our financial results for that year and in preparation for our AGM. Tēnā koutou katoa. Over to you, Scott. You're on mute.
Sorry about that, I thought it would be taken off. Ngā mihi Precious. No Scotland, oku tupuna tipu aki o ke o te pote. No reira ka mihi ke te moana ko Otago Harbour. Ngāre ka tamaki makaura o taku kāinga. Ko Scott Barkman tōku ingoa. Ko taku te ranga mahi ke Ngāti Whātua Ōrākei Whairawa ko te Chief Financial Officer. First of all, I'd just like to thank everybody for this opportunity to actually present for the third time the financial results of the Trust. I've been with the Trust now just close to 3 years. I'm originally from Dunedin, and obviously Otago or Te Poti, and I consider myself a mainlander of New Zealand and a Highlander supporter, which sometimes gets me into a bit of trouble. But hey, you always live in hope that they'll win the Super 15 again. But I'll leave it at that, and I'll pass back to Precious or Ren.
So tēnā tātou, just to help us go through the agenda for today, obviously we open with a karakia in accordance with our tikanga and our mihi, so thank you to Ren for undertaking that role. We're going to kick off by talking a little bit about our group structure. Then we'll be moving into our group assets. We also would just want to share with you our auditing process and the results of it, our auditing process. The bulk of tonight's session will really be spent in talking about our financial statements, taking you through that step by step and highlighting some important things within the financial statements. We'll briefly talk about what's coming up, which is namely our AGM, and then hand it back over to Ren to close off and close us with a karakia. Before we move into the group structure, just a reminder, whānau, that if you have any questions, any pātai that you might like to ask during this webinar, please use the chat function and just post your questions in there. We won't be answering those questions live, but every single question we commit to answering. So they will be answered by our team, and they will be sent out by our communications team alongside this video. So anything you want to know, any question you have, big or small, please put it into that chat function, and we ensure that they will be answered. So moving into the group structure. So as you can see here, kei te pito o te ao, te marae. Ko ōrākei te marae, ko ōrākei te pito o te ao. So the centre of everything we do starts with our marae. It is the heart of our hapu, and it connects us through our whakapapa, and it grounds us in our location in Ōrākei. So that remains at the centre. Our group structure, stretching out from our marae, essentially starts with the Trust. So this is a post-settlement governance entity, and the responsibility of the Trust is to lead the group. Our purpose is to receive, administer, manage, protect and govern the assets of Ngāti Whātua Ōrākei, and to ensure that our cultural, commercial and social development is undertaken for the benefit of all of our whānau, all of our members. So in order to do that, the Trust has what we call 2 subsidiaries. So one of those subsidiaries is Whaimaia. And Whaimaia is essentially our social cultural development arm. Whaimaia was established to advance the cultural, social and environmental aspirations of us as Ngāti Whātua Ōrākei. Whaimaia has its own board. And currently our whanaunga Tom Irvine is the chief executive, and we have a number of our whānau doing amazing work, not just for our whānau, but for our communities in that Whaimaia space. The other subsidiary is Whairawa, and Whairawa is the commercial arm of our group structure. So they're responsible for protecting and building our asset base of Ngāti Whātua Ōrākei. So they are the engine room that generates the pūtea that we then feed through the Trust and Whaimaia to deliver outcomes for our whānau. So moving to the next slide.
Mihi, Precious. Precious has just given a very good overview of the Trust and the structure. This slide talks to the legal entity structure of Ngāti Whātua Ōrākei, or as I'll call going forward, the Trust. Precious has already talked about the role of Whaimaia and Whairawa, so I won't go over that again. But this is very much, as I said, the legal entity structure. It's also it's the accountant's view. It's sort of what drives the accounting view of the world, which we'll get into as we move through this presentation. This structure has not changed since the creation of the PSGE, and it's really around a tax-efficient structure, which I'll also elaborate more as we go through. As we've already talked about, we have very much separate activities between Whairawa and Whaimaia. And as Precious alluded to, there's very much an independent governance structure for each piece. There's an independent board for Whairawa, which has independent directors on it. There's also an independent board for Whaimaia, which again has independent directors. At the trust level, there are obviously elected representatives elected by the hapu. As you can see, under Whairawa, we have limited partnerships, and we're circa 25 different limited partnerships under that structure. And each limited partnership is effectively a standalone entity that's really designed to hold a certain asset or perform a certain structure. Under Whaimaia, we obviously have the two charitable trusts, and as a result of that, it's a charity and has to be treated as such. The last remaining piece I'll talk about being tax efficient is referring to the box here, Brenton Place. Brenton Place is one of the properties that's owned by Whairawa, and as a result of that being on Maori freehold land, we are a Maori free tax authority and can claim 17.5% as a result of that. I'll leave the structure there, and if we can move on to the next slide. Here I want to talk about the annual audit, and it's a process that is something that we have to do. And if I can sort of go to the next slide, I think the first question we've got to ask is, why do we actually have to have an audit? And there's really two main themes to that. There's a legal requirement. We're a big legal structure. We have a number of entities. We're required by law and legislation to actually prepare financial statements. And tonight we're talking about the consolidated financial statement. So that's very much the view of Whairawa plus Whaimaia plus the trust to arrive at the consolidated view. Whaimaia, as I've already talked about, is a charity. So it isn't required in itself to produce separate financial statements. But when we move away from that, we come down to good governance. It's good governance to have an audit. It's somebody independent looking at the results and of some of the assumptions that I make, or the team makes around the financial statements. It's governed. Obviously, we have our auditors, EY, but it allows us to put a line in the sand and compare year on year. We also have, as part of the process, the RARC, which is the Risk Insurance and Audit Committee, who are another governance structure around it. So we also have probably the final piece of why do we have an audit or prepare financial statements. It's really around communication to the hapu or stakeholders of Ngāti Whātua Ōrākei. Obviously, the hapu are the key stakeholders, as they are ultimately the owners of the business. So for that reason, we prepare consolidated statements, and we ask EY, our auditors, to come in and perform their work and actually express an opinion on the accounts and whether they're actually a true and fair view. How do they do that? They come in, they take very much a risk-based approach. They look at the key risk areas of Ngāti Whātua Ōrākei, and I'm quite happy to share with them. It's the investment property portfolio valuation, it's our development activities, and it's our government grants and complying with the requirements of the contracts that we enter into in Whaimaia with our government grants. How do they do it? Well, as I said, it was a risk-based, but they'll come in and they'll perform sample testing. And they'll look at certain number of transactions and just make sure that those transactions are captured and recorded correctly within the financial statements. They'll also look at anything new that they haven't seen from last year, and the best example of that this year was the joint venture that Whairawa entered into with Precinct Properties for the two buildings that we purchased a stake in the Te Tongaroa precinct. So it was new to the auditors, so they performed additional testing around that. Ultimately, once they've done their testing, what do? They reach a conclusion or an opinion on the audited financial statements. And that opinion is actually on the next slide, where we've taken a snapshot of that opinion. Now, the key report from EY. And the key bit is actually that second paragraph where they express their opinion on the consolidated financial statements that it presents fairly in all material respects the financial performance of the trust at 30 June. It's what's called a clean audit opinion. They've said what has been prepared and presented is fine. It complies with all the required accounting standards, which is the law, and it presents a true and fair view. If there was anything they didn't agree with, they would express that in this letter. And potentially a worst case scenario is they would express an unqualified audit opinion. Now, Ngāti Whātua Ōrākei has never had that, and going forward, I anticipate it never will. Once they've done that, there's obviously quite a lot of reporting goes, and they report their findings to each respective board. So for the Whairawa accounts, the Whairawa board, for the Whaimaia accounts to the Whaimaia board, and the trust as well. And to the consolidated group, they sit in front of the trust board and they talk through what they found and the results of their testing. As I've already said, it was a good result this year, and as in previous years. We have a clean audit opinion. The audit went very well, and we're happy with EY. EY are one of the big four, so they audit us, but they audit, for example, a Precinct Properties, which is listed on the New Zealand Stock Exchange. So they're considered one of the big four. If I can then move on to the next slide, and we'll start looking at the financial statements. And as Precious has already said, if you want to ask any questions, please feel free to put your patai into the Zoom Q&A or the chat function, and we'll come back to you with the answers on that. If we then move on to the first slide of the financial statements, this is really just a quick overview of what are the four financial statements that actually form the overall consolidated financial statements. There's a statement, the first one being the statement of comprehensive income. Effectively, it's called the P&L. It's our profit and loss. It reflects our income that we've earned and our expenses incurred over the financial year. This statement of comprehensive income is actually a mixture of cash and non-cash items, and by non-cash item, we have incurred the expense, but we may not have paid it. We may have earned the revenue, but we may not have received it. It's very much a mixture of both cash and non-cash. If I move on to the second one, being the statement of financial position, or more commonly called the balance sheet, this shows our assets and liabilities, but effectively shows what we own and what we owe. Being owned being our assets, and what we own being our liabilities. It shows the underlying financial strength of Ngāti Whātua Ōrākei, and the net balance being the 1.3 billion of equity, which is a very strong position. The third statement is a statement of changes in equity. It just shows how our equities move. So that $1.3 billion I just referred to, it shows how that has moved over the year. And the last one being a statement of cash flow, which really illustrates the movements in our cash over the three categories that are highlighted, and reconciles it back to our opening cash and our closing cash. So it's very much a view of the cash flow for the period. If we move on to the first, I'll call it the first table of numbers. And just to reiterate, this is the consolidated financial statements of the trust. I just quite like to put a bit of context though before I start. And if we look back, and we go back to 2022, that really was a year of two halves, up until December, because our year starts 1 July and ends 30 June. Up until 31 December, we're actually in a good place where there was a year of investment. We're putting a lot of investment in development type activities and other stuff within Whaimaia. But then COVID came along in the second half and effectively locked the country down. And so it really was a year of two halves. When we then moved on to 2023, it was an interesting because we saw that the investment that we put into 22 coming through in 23. We sold 29 houses on Onaroa, and we started off some other initiatives. So it was very much a year that we started to realise some of those initiatives, etc., that investment that had been put in previously. But it was also a year of continued disruption. We had COVID, and as a result of COVID, we sort of went from an environment of COVID disruption to economic disruption when the interest rates started to climb. And that very much carried on into 2024, where the background to these numbers is a high interest rate environment and an economy that actually went into recession. Still, the world as we're operating in today, hopefully we've seen the bottom of it. We've seen interest rates start to come down, and hopefully the economy is starting to bottom out and will improve over the next 12 to 18 months, although difficult to exactly say when. This is actually up to debate. If I can sort of move on and start looking at some of the individual numbers, you can see the revenue number there. It's gone down year on year by 17 million down to 79.94 million. And our expenses have also come down year on year by 13 million down to 88.46. That's resulted in our profit before tax of $8.52 million loss for the year, which is an increase on prior years. But if I can move on, and I'll cover that off in the next slide. If we could go back one slide, it'd be great. Sorry about that. If I look at the big number there is our gain on investment property. Last year it was a loss of 32. This year it's a loss of 38 million. The investment property portfolio is effectively all the assets that we own. It's things like the precinct here at Tongaroa. It's ACOM House, for example, that currently the building I'm sitting in, or it's our bare land. This portfolio is valued by independent valuers, and we ask them to come in and they value those properties. These are guys like companies like CBRE, JLL, Seegers. They're specialists in their field at valuing properties. We come in, they come back and they say, okay, here's our result. And for the year, we saw a write-down of 38.95 million. Just to put a little bit of context around that number, I spoke last year that I thought 24 would be flat at best. Obviously, I was wrong in that prediction, and we actually recorded another loss. It's an unrealized loss, though. It's not a cash loss. This is purely a loss driven by the valuation that has been prepared by the independent valuers. It's really out of our control. They look at our portfolio and they'll look at other sales, they'll look at other data points they can see within the market to arrive at those valuations. It's only a small amount of the overall gains we have seen on that portfolio since the creation of the PSGE in 2012, 2013, which is somewhere around about 900 million to date as I sit here today. It's a good result. A loss, it's interesting to say a loss is a good result, but when I look at some of our competitors in the property sector in New Zealand, some of our listed companies, we've actually fared very well again compared to them. Our overall decline in our portfolio was around 3%. Some of the other ones you can see in the market are 4% to 7%. So I think overall it's a good result. I think the last thing we should never lose sight of, it's losses can be expected to happen, and you should not be worried about making losses. We're a long-term holder or investor, and we're focused on the long-term performance and return on this. We will take losses. We'll take more losses in the future. But I think what we've seen is the quality of the assets and the increase we've seen over the years is done very, very well. So overall, if I look at the bottom line, and I'm talking about the net profit and loss before tax, our net loss for the year is 49 million, which is an increase on 35 million from 2023. I think, though, I'd like to talk more about that result, and if we can move on to the next slide. If we can move on to the next slide, it'd be great. Great. This is a slide that really takes, if you look at that loss I just talked about, and I'm sort of focusing on the underlying loss for the year of 8.52 million on the previous slide. This slide really talks about or introduces this concept of, what is our underlying operating result? And the result is a much better picture. As I've previously discussed, I'm looking at, I'm saying in the accounting view of the world that's in our financial statements has an underlying profit loss of 8.5 million. If I back out the one-off items, and these items that are one-off in nature aren't really part of our core operation, and by that I mean our core operation is things like revenue received on rental, whether it's from building tenants or ground leases or government grants, etc. in Whaimea, or some of the other grants we receive. It's also backing out property and our development activities, and that's really driven around the fact that is very lumpy in nature, and we, due to the timing of development and the length of time it takes us to actually, complete these developments. To get back to our core underlying revenue number and expense number, I've backed those out. So if I have a look at the total revenue, excluding one-off items, our revenue has actually gone up 65 million to 72 million. And a lot of that is generated by some of the revenue we've seen come through Whairawa and some of the rental that we have, etc. The one-off items that I've highlighted, which are backed out for 24, relate to insurance proceeds that we received on some of our insurance claims. So our revenue is up year on year, or our underlying revenue. If I look at the expenses, again, we reported $88.5 million expenses. If I back out property costs, i.e. the cost of those buildings we've sold, which is consistent with backing it out of revenue. If I also take out some of the one-off things like the impairment of inventories, which is a number that relates to the Hawaii Street development, and probably more around the civil construction costs that went into the land that the units are built on, because obviously we don't sell the land. I've also backed out some other items, grants and programs. This is really, a lot of this is things like the NIB premium we pay for health insurance and some of the cultural activities. And that's backed out really because there's no real revenue stream associated with them. It's effectively money that we spend. I've also backed out Toi Tupu, which is the interest cost on the Toi Tupu. And just to make the year-on-year comparable, I backed out the marae cost of 800,000. This is the first year that we've moved in the headcount and operations of the marae into the trust structure, and so that's increased our cost base by 800,000, which is staff expenses and maintenance on the marae. So if I look at that, our expenses have gone up slightly, obviously from 64 to 67, not anywhere near the 101 down to 85. So it's a much better view. So our underlying operating profit is effectively increased year on year from 1.5 million to 4.7 million, or 3.2 million, or 215%. The purpose of the slide is to say the accountant's view of the world has very much a loss for the year of 8.5 before the investment valuation write-off or non-cash items, and a very significant write-off, the bottom being 49 million. The actual underlying result is a lot better. And that result is what we sort of focus on, in our day-to-day work here. It's around driving revenue streams. It's around looking after our cost base, etc. So it's really, this slide was really put on just to say the accountant's view of the world in our financial statements is one thing, but this is really showing a different picture. And it's one of the faults of financial statements, that they don't sometimes give you a true view of the underlying operating of a business. If we can move on to the next slide.
So Scott, just recapping some of what you shared.
Yes.
We did experience a loss in our investment property.
Yes.
And that was a loss that was shared by everybody in the sector.
Yes,
And that loss is largely out of our control.
that's correct.
But the things that we can control, we saw a positive outcome. So that underlying profit is as a result of the things that we are able to control. So just wanted to recap on that because I think it's an important point for us to understand.
No, it's a very important point because the key thing here is the write down on the investment property portfolio is very much out of our control. But I would say they are still quality assets, and I think they've ridden out the last 2 years' economic environment very, very well, which is a testament to the quality of those assets. If we had assets elsewhere in the country or a different mix, we could have been, to be quite honest, we could have been in a little bit of a world of pain around that write-down number. But we have good assets, and they'll come back, as I said. This is pretty much it's a blip on the length of time that we will hold these assets for. If I could move on to the next slide. Again, this is our balance sheet. This is effectively what we own, and it's the assets. Now, I've talked quite a bit about the investment property. We had some cash at the end of the period. Inventory relates to the inventory being Hawaii Street development is a large piece of that, which we will sell, hopefully targeting sale of that in December this year. I'm not proposing to spend a lot of time on this slide. I think we've covered off the key number, which is really our investment property. If we move on then to the next slide. This is really just a breakdown of what that portfolio consists of. So you can see on the right-hand side, 830 odd million of it is the precinct here to Tongaroa. We have ACOM House. We have the 430 million of bare land and other assets out there. So this is really just a diagrammatical view of the portfolio, which really demonstrates there is a lot of concentration in the precinct here to Tongaroa and our bare land and other assets. If we can move on. This slide is our liabilities, or what we owe. The key number here is obviously our loans and borrowing, which as at 30 June 24 was 205 million, an increase from 23 of 184 million. That increase is really driven by the Hawaii Street development, where we effectively borrow the money to build the units before we then sell them. So we'll see that number come down in December when we effectively sell those units. It's a number I'll spend a little bit more time on the next slide, but the other key number here is our LVR ratio, our loan to value ratio. It's increased slightly from 13% in 2023 to 2024, and that's really driven purely by two things. One, the fact that loans and borrowings has increased, but also our portfolio has declined in value, as I've already spoken to, around the fact of the portfolio write down. I'll leave it there, and if we could move to the next slide, which I think...
Scott, just jumping in on the LVR. From memory, our cap is 30?
50. 30, sorry. 30, sorry.
Yeah, 30. So what that shows us, whānau, is that our LVR is 15%. We are able to go up to 30%. So we're well under our LVR ratings. Most other property organisations are way past 30%. They are up around a 50% LVR capability. But because we take a long and relatively conservative approach, our cap was decided to sit there. So you can take some comfort that what we are borrowing is well within our loan to value ratio.
That's correct. Yes, and Precious, you're right. A lot of our, won't call them competitors per se, but a lot of the other companies, their LVR ratio is in the to 50%. That 30% is obviously governed by the trust deed. We can't go above that. And so it's one of the metrics that we are continually tracking to make sure that we're not going to go above that 30%. The 50% I referred to relates to our interest coverage ratio, which I'll cover off in a second. If we can move to the next slide. I put this slide in this year just to give an overview of our debt level and our interest coverage ratio. And it's to provide a sort of background around some of the governance we have around our debt. If I can quickly explain the graph, the blue line is our debt level, and that's referenced to the left-hand side. So, for example, in 2024, the dot is around the $200 million mark, which is what our debt level is at 2024. If I can then move on to the orange line, that's our average interest coverage ratio during the period. The interest coverage ratio is one of the key ratios under the trustee that we continually monitor. It effectively says for our earnings, we can have no more than 50% of our earnings can be interest cost. So if I've got $100 of earnings, I can only have $50 of interest cost. So the moment I go to 51, I breach the trust deed, and we wouldn't be able to do the deal or whatever we were looking at. We have a high degree of focus on the borrowing. We're continually looking forward, as I've put 2025 and 2026 onto this graph. We actually do 5-year rolling projections of our debt levels. And that's purely to make sure that we're going to maintain compliance with the interest coverage ratio under the trust deed. There's a lot of focus, as I've put, around our borrowing. We obviously have the board oversight and reporting, both to the Whairawa board and the trust board. I've also talked about the 5-year plan, where we're continually forecasting our debt levels going forward to make sure we're not going to breach those trust deed covenants. I also have a treasury policy in the background that I have to comply with. And that treasury policy is really focused around hedging of our interest rate exposure. Our debt is, we borrow money from the banks and we pay a floating rate of interest. And what you were seeing here, and you can see it coming through between 2022 and 2024, our interest coverage ratio increasing. That was by and large driven by the increase in interest rates as a result of the Reserve Bank putting up interest rates in this country. As you can see going forward, those interest rates are starting to come down, and we'll see naturally our interest coverage ratio go down. But under the treasury policy, because we're paying floating, we fix the interest rate with the bank. So I go to the BNZ, for example, and I agree that I will fix that rate at 3% going forward for 2 years. And it's something that we focus on a lot around ensuring that we're controlling our interest cost on the debt that we are borrowing. As I've already sort of called out, this is obviously a high level of focus for us, for myself, but also the respective boards. And we're always looking at our debt levels, our compliance with the trust deed, but also making sure we've got capacity going forward that I could borrow more if we had to take advantage of an opportunity. And that opportunity could be buy a business, buy another block of land, or whatever that opportunity may be. I think one of the key points though to come out is our level of debt is manageable, and we've been managing it very well, I believe, especially in that high interest rate environment that we've seen in the last 2 years. And I think going forward, we're well positioned to take advantage of any of those opportunities that I briefly spoke about that may happen. If I look at the last slide, if we can go to the next one. This is our cash flow. This is one of the financial statements within the consolidated group. It just shows where our cash went to and where it came from the real key number there is the bottom line. We've increased the cash we have on hand by 2.3 million over the period. Again, I just like to emphasize we do daily cash flows, we do forward-looking cash flows to make sure we have, we're on top of all our cash, where it's moving and what it looks like going forward. I think I'll leave it there. As I said before, if you'd like to ask any further questions or patai, just put it into the Zoom Q&A function.
Scott, perhaps just before we wrap it up, I think it's good for us to acknowledge that the Trust and Whareroa have a SIPO implemented now with the Statement of Investment Policy and Objectives, which is a set of our beliefs and policies around what we will invest in over the next 5 years. Also to acknowledge that there's a 5-year investment plan and then a desire out of that investment plan to look at non-property financial assets for the Trust to own and invest in. So yeah, perhaps if you wanted to have a bit of a talk about the progression of Whareroa as well as the Trust in maturing our portfolio.
Yeah, no problem. No, it's a great question, Ren. We have a portfolio that's very focused and concentrated on property. And the challenge has been from the Trust Board, and it probably goes back a year or two, is around diversifying that portfolio. So we're not exposed to the property portfolio and the rental stream above that, from that, not above that. And as Ren's mentioned, we are looking to diversify, but we want to make sure we're doing it in a very well-controlled manner. And so after a lot of debate between both boards, the SIPO was agreed. And the SIPO is really the document that will manage how we diversify that portfolio. So we'll move some of the property that we've got and we'll take advantage of, potentially selling some of that property, but taking those proceeds from it and reinvesting it into higher yielding assets. Now that could be two things. It could be industrial property if we actually see an opportunity there, or it could be into financial assets. And by that, I mean financial assets being managed funds, effectively equities onshore and offshore. And the driver for that is really to increase the yield or the return of the portfolio. Because obviously, the more money that Whareroa can generate, that obviously can be passed up to the Trust, and the Trust can use it for their cultural ambitions, etc. So we have this SIPO. We have an asset manager who's just been appointed, and we will look in the next, as part of the strategy of Whareroa, to effectively recycle, what I call recycle the balance sheet out of property into these assets or other types. And it's really, as I said, a diversification thing, but it also reduces the risk of the portfolio because we'll have revenue coming off this type of property and perhaps this type, but also revenue off a financial assets portfolio or managed funds or equities, depending on how you want to look at it.
Thank you, Scott. I thought it's important for us to acknowledge, because the year coming up, the 24-25 financial year, that's potentially on the radar for the Trust and Whareroa. So thank you.
Yeah. And sorry. Also, the other point I would just like to raise about our investment into those financial assets, we're also going with the same strategy of being a long-term holder. We're not going in there to buy equities to try and make money, in the first week and bail out. We're taking these positions on long-term hold, yield enhancing, which fits with the overall, what we're trying to achieve here.
And Scott, that long-term vision allows us to hold tight, even despite spikes, highs and lows in the economy. And we've had a pretty tough economic environment since COVID. And the impact of that we saw reflected in the valuations of our property. And despite that, our operating at an operating level, we're making a profit. So maybe do you want to expand a little bit about the economic environment we have been operating within and the impacts of that?
Yeah, no, happy to do so. When I started looking at the financial performance, and I sort of gave context around 22, 23, 24, as I sit here today, being the CFO of all this, we are in what I believe is a very good position. We've ridden out the storm, we've ridden out the high interest rates, we will ride out the economy, and hopefully be in a good position when it starts to pick up, that we'll be well positioned for that. It's really driven around the strength of the balance sheet and some of the tight governance and controls that we've got around, spending, for example, or investing. If we want to do a deal, just to give the hub a background, if we want to buy another asset, for example, it goes to the Whairawa board. There's certain investment criteria that we have to meet around return, for example. But that doesn't finish there. It then goes to the trust board. And the trust board will also have their say, and we'll talk them through it. So there's quite a robust governance piece. So I think that's put us in a very good space for the last 2 or 3 years. We didn't have to panic. And as we sit here today, we're not sitting on assets that a lot of other businesses in New Zealand are forced to sell. And we can see that we quite often get, calls around, are we interested in this asset and that asset? Or you read the paper and these companies are going, these construction companies and development companies are going into liquidation. We had the benefit of being in a sound financial position that we just wrote it out. But we are starting now to look at 2 years down the track where we think the market will be. And we're starting to put some investment into some of the development. I think it's well known around the Unitech development. We're just going through all the relevant approval processes with both boards, and we'll kick off that one next year. And that'll hopefully put us in good space, 2 years down the track when the market should have and will have turned. I'm not looking at the crystal ball or anything, but that's the intention. Things will get better, and we'll be well positioned for that.
Awesome. So Scott and even Ren, if you've got something to add here, what do you consider are the take homes for our whānau to know in relation to what you've presented about our financial statements tonight?
Yeah, for me, it's the underlying operating profit is up, and that's the number that we should be reviewing because when the auditors and the valuers come in, and obviously the property market has taken a hit. Our property portfolio being very strong is a key takeaway for our whānau. We are strong landowners, we have quality assets, and we have not taken a loss as big as other property companies. We manage our risk really well. We've got really strong controls here now at the Trust and at Whairawa with our RAC committee, with our investment committee, with our 5-year investment strategy and our SIPO. I'm very confident that, as like Scott said, in the future, we can't predict what the economy is going to do, but we've ridden out property declines before over our history. We've been in Tāmaki since 1740, so we've seen every property climb and crash. And so we're strengthening a cash return by starting to diversify our assets, and our whānau should be comfortable because then we can deploy that cash out to iwi development. So I'm very confident. The economy took a big hit because the interest rates rose so quickly by the Reserve Bank, and now it slowed the economy down somewhat, quite a lot compared to other countries that have bounced back. So the government's got a job to do. We can be confident that we have strong assets and a very good processes in place to manage our asset portfolio. So those are kind of the takeaways for me, Prish.
Yeah, and I think just to contribute to that it's by design that we have quality assets. Yes. These are intentional acts, partly by our predecessors, so the likes of Uncle Hugh, Uncle Joe, Uncle Grant, taking action to get us some quality assets, but then the continuation of our mahi to take good care of those quality assets. So back to you, Scott, the take homes for our whānau based on the information shared tonight.
Yeah, no, mihi, Precious. I think we're in a strong financial position. We've ridden out the last 2 or 3 years, and I think we're well positioned going forward. I think we've got a quality of asset, and I think we've got a very sound strategy around those assets, and whether it's a diversification strategy into the managed funds which we've discussed, or just looking to increase the yield on those assets. I also think we've got a very focused boards, I think, across all the entities, whether it's Whamaia, Whairawa, or the Trust. And I think we've seen that come through in the last 2 years, and ultimately where we've ended up here today. They've had to make some hard decisions on both sides. But I think that strong governance gives me, as a CFO of this, confidence that I can go to the board, I'll get challenged, or Whairawa will get challenged by the Trust Board, or I'll get challenged by the Whairawa Board. So there's that good level of governance, I think, which is very, very key to an organisation this size. Because I think we forget we're actually a large organisation. Our balance sheet's 1.6 billion. I'd love to know where that ranks in New Zealand, but because of the existence of private companies, I'll never really know. But it is a big company, and a big company needs strong governance. But it has that, it has the quality of the assets, as we've seen. I think if I was to crystal ball gaze and look forward, I'm hoping, and to Ren's point, I'm hoping we've reached the bottom of the economic cycle. If we haven't, I don't think we're going to go too much further, but as I keep sort of reiterating, we're well positioned if we have to. Big question, what's the investment property portfolio going to look like in full year 25? I got it wrong to a point for full year 25, and I thought it'd be flat at best. Obviously, the portfolio's down. I am hoping it's going to go up. It's a big call, but I think we've got the quality of assets. But again, won't know until next year, and again, it's sort of outside of our control by and large.
Awesome. Thanks, Ren. Thanks, Scott. So moving to the next slide, what's coming up, whānau? So just a reminder to everybody that we have our hui ato, we have our AGM, which is on Sunday, the 24th of November. It will be held at Ōrākei Marae, and we will also be holding it online, and it starts at 11 o'clock. So ahead of the AGM is our voting process. So everybody should have received their voting papers by now. If you haven't, please email them at info@elections.com, and that's elections with a Z, not a S. Or you can call them on the 0800 number, which is 0800 666 040. If you've moved recently, please give them a call to get your voting packs. Our postal voting will close at midday on Wednesday, the 20th of November. And online and in-person voting closes at midday on Sunday, the 24th of November, which is during the AGM. It's really easy to vote online, whānau. That's how I voted, and that's how many of my whānau have voted as well. So get your voting in. Please come to attend the AGM, and really grateful to everybody who has come this evening to become informed and educated about our financial results. So tēnā koutou, I'll hand it over to Ren.
Tēnā koe, Presh. Scott, tēnā korua. I want to thank you both for hosting this webinar. And whānau mā, as part of our lifting of our financial understanding and literacy, this is a key part of our connecting with you as our whānau, as our whānau who are part of our Ngāti Whātua Ōrākei Trust, the Ngāuri o Tupiriri. So I want to thank you both, Precious and Scott, and also our wonderful staff behind the scenes, Piki Te Ora and Hariata, for connecting this tonight. This is a really important time for us to start understanding what it is about our asset portfolio and the kind of decisions that are going to be made over the short term, mid-term and long term. So hoi no, māku tēnei e whakakapi, ato tātou nei hui a unuhia, te hautapu āriki, unuhia te kōrero tēnei wānanga, a whakarihe ronga kia paitara a whare tuturu a Ngāti Whātua kia whakamaua kia tīna, hui e, tāi ki e pomārie whānau, aroha nui kia koutou katoa.